Hi traders. Today we start a new trilogy of trading optimizations using the channel breakout strategy of TradingView. When I say trilogy, I don't try to mimic Lord of the Rings, but I will post 3 videos optimizing the strategy on 3 pairs from 3 different categories. You can suggest the one you like from cryptos, forex, and indices or metals in the comments, together with the favorite time frame. If you don't, I will choose it for you. The difference in today's optimization is that I took the same pair on 11 different exchanges and saw what is the optimal value using also the new, still in beta, a feature of TradingView, the Deep History. I'm excited for Deep History because it gives you a nearly limitless environment of backtesting data in a convenient, fast, and reliable environment. Before that, the closest to this was a manual download of backtesting databases, loading them in MT4, and using Strategy Tester there to see the results. Of course, the strategy should be coded in that language to work. I use the exchange of OANDA, FXCM, TradingView Index, Bitstamp, Kraken, Coinbase, Gemini, Bittrex, Binance with BTCUSD, Bybit and FTX. TradingView Index is not an exchange but is a reliable database of comprehensive price action from the old days. What I want to say with strategies based on Bollinger Bands, channels, envelopes, Donchian or Keltner is the optimization per pair and timeframe can offer tremendous insight. I knew a successful trader that worked only on envelopes and EMAs. Don't think success is a gazillion indicators with 100 parameters that can be compared with the cockpit of a spaceship. Things are much simpler than you think. I hope I can pass that to you in the journey we will have with this channel. By the way, did you subscribe? No, okay, no problem. I will not tell you the secret of. Just joking, but do subscribe. I plan a lot of things when I got the sense that there are people who hear me. Now, about the strategy. The channel breakout strategy creates a channel with its bands based on the highest and lowest values for the last X bars. The strategy enters long if the high of the current bar is higher than the upper channel band of the previous bar. It enters short if the low of the current bar is lower than the lower channel band of the previous bar. Sounds simple, you're right, it is. The issue here is to see how the pair moves within the time frame. The more statistical data you gather for these moves, the better you can anticipate the future ones. Don't forget the risk disclaimer I put at the start of the video, and with this in mind, we start. I sorted the exchange based on the number of closed trades, and I will present a table with all of them at the end. The first one is OANDA. The percent profitable doesn't exceed the 50%, but I will give a spoiler, none of the rest 10 screenshots does. Let's focus on profit factor on equity curve, which is like a rocky mountain and few thin clouds on the top represented by the drawdown. Compare equity curves of the other ones and not only the data. OANDA setting for the strategy to get these results is set at 6. Do see that in all screenshots, the deep history is enabled, and you can see it with the slider at the top right. We move to the FXCM. FX that you see at the top a little bit grayed out is FXCM. The value of the settings for FXCM is 5. Pause if you think you need more time to see the data or the curve. Now we see the TradingView Index. That's the data TradingView gathers, as old as it gets, regarding the price action of popular pairs, and especially cryptos. The value of the settings for the TradingView Index is 37. We move to Bitstamp. You do notice that the equity curve doesn't show big differences. The value of the settings of Bitstamp is 34. The next one is Kraken. The value of the settings for Kraken is 36. Don't write the value, I have a detailed table in a few minutes for you. The screenshot you see is from Coinbase and the setting for this exchange is 37. You will notice that all exchanges apart from OANDA and FXCM are around 34 and 37. Gemini is the next exchange and the value for this is 36. Bittrex is the one that follows with a value of 36 too. We came to the popular Binance. Binance doesn't have a USD pair with Bitcoin but a USDT and is the closest we can have. So with BTCUSD, the value for the same thing is 37. Bybit follows with the same value of 37. Last but not least is FTX, which is again the same value of 37. The reasons that you see such a huge difference in the backtest data are more than one. First is that obviously that there are price differences. There is not a central exchange to define the price, but rather the traders within these exchanges. The second is that the data that were used to extract the data are not the same. They don't start on the same date. Some of them are old and some are new exchanges. Focus on an average approach, but keep in mind that all of them are profitable. There is a difference to the drawdown, a very important fact for me. Again, I remind you that the order size is $5,000 fixed and no commissions. The time frame is 1 hour, which is not a low one to be crashed from the spreads, even though this is not a guarantee. Now, let's move to the screenshot from the table with all the exchanges and their data. We see that the first one is OANDA and FXCM only because the channel length is smaller and offers more opportunities. I didn't investigate the reason, but I do know that most forex brokers don't operate 7 days a week. The crypto group. The table is sorted with a descending rate of the closed trades. For me, the profit factor in all the rows is very good. If you want the trade list for some of these, let me know and I will upload the relevant file to Google Sheets. If you have anything to say or suggestions for the current strategies or strategies you want to test, do let me know in the comments. Remember, finding an edge to your trading and applying proper risk management and psychology is the recipe for success. Thanks for your time. Sincerely, the trading elephant himself.